And then another issue, a crisis issue that seems to be constantly in the press is the fact that we are getting deeper and deeper into debt as consumers. And if we look at the data, we got this from Stats Canada. This shows the debt to disposable income over the last roughly 30 years. And most of this is related to housing, of course. So we were at 85%, that is debt to household income. Now we're at 176%. So that is doubled, and that looks like a reasonable crisis. But like most things, it's always worth exploring a little bit more just to see if there's something else behind these numbers. So here's a question for you. What's the lowest cost form of debt for individuals typically? Anybody? Mortgage on your home. How much mortgage debt has been used to acquire assets versus being used for personal consumption? We went to Stats Canada to ask this question. It's one they can't answer because they don't know. Apparently, nobody seems to know. So we thought, okay, let's see if we can figure it out some other way. So first, let's look at the cash flow. There's debt that you have, and there's how much it costs you to service that debt. That blue line you're looking at the top is the amount of income needed from a household to service both the principal and interest of their debt. It's increased in the last 30 years from 12 to roughly 15%, so it's definitely gone up. But the interest component has shrunk. So whereas in 1990 we spent 10% of household income servicing just the interest on our debt, today, with double the debt, we're using 6.5% of the same income to service it. By that standard, this does not quite seem to be the crisis, unless you expect interest rates to go up in the future back to where they were in 1990. I want to look at it from a slightly different perspective. One of the things Stats Canada does is take a look at the net worth of Canadians and their debt and their total assets as well. So we took a look at the total assets 2014 to the 2018, and assets increased from about $11 trillion for all Canadians to $13 trillion. Debt increased from 1.85 to 2.24, which is what the crisis or stories is all about. But that meant that the net worth of Canadians increased after that debt is taken into account from 9.1 to $10.74 trillion. So let's look at this a slightly different way. Over 4 years, assets have risen by $2 trillion, liabilities by $400 billion. So that is a loan-to-value rate of 18%. It was 17% in 2014, or more or less the same. And the only reason that it's 18% is because both declining home prices and equity markets at the end of 2018 changed the numbers. This is the first negative year of wealth growth that Canada has experienced as far as Stats Can goes back in terms of their own records. So is this actually the crisis that it appears to be? Because unless we define what the money is being used for, it's hard to say that people are being profligate.